Hello traders and welcome to another video review. Today is Friday, November 4th, 2022. This is Non-Farm Payrolls Friday at the end of the very busy week. So let's dig in the Forex calendar. What do we have here? What are the most important events for today? Retail sales data from Australia already published in line of the expectations of 0.6%. The data was. Construction PMI is scheduled for release at 11:30. Those data are from the UK. Market participants expect a drop 52.3 to 50.5. President Lagarde, ECB President Lagarde will give a speech 11:30 as well, and then the non-farm payrolls are scheduled for release as usual 2:30. The non-farm payrolls are expected to decrease this time from 263 to 200, and unemployment rate is expected to increase from 3.5%, record low or very close to the record low, to the level of 3.6%. We have the data from the Canada as well, employment change and Ivey PMI scheduled for release at 2:30 and 4 o'clock respectively. So kind of a busy day as any of this week was. Please remember, we got the Fed interest rate decision, Bank of England interest rate decision, plenty of interest rate decision, and now we got non-farm payrolls. We cannot say that it was a boring week. It was a great week for trading. So let's dig into the technical charts to see what is going on. I think we should start with euro dollar. Euro dollar daily time frame chart. Let's switch to the 4-hour as usual to see what is going on. And what do we have here? ABC to the upside. Done, and we are testing. We broke below the lower channel line, which is not good. It's not usually good for this kind of a movement. So now Fibonacci, we don't need Fibonacci, minus 3.53%. However, the last low was made, it's okay, 53%, and maybe here, yes, 361, and this is 363. So this is equal. That wave to this wave are equal. We might have another market geometry level. Very nice. Let's say it is the low of this bar, which is 9,731. All right, so what it means is that if market wants to respect the length of this correction and the same, almost the same length of this correction, we should see a strong bounce, right? If the market participants respect these technical levels. However, we got the bounce, but this is very confusing candle here. This candle here might mean that the bulls took some supply. They let the supply to dry off or dry out, and then they continue to move higher. However, in order for this strategy to be much more profitable and give some kind of a nice result, they need to break above 9,811, the nearest technical resistance. Okay, and as long as they trade below this level, we might see this area between the 9,811 and 9,700 and what it was, 31, as some sort of the testing zone. Okay, testing zone of the lower channel line of these two technical supports. So they might go up and down, consolidate a little to see who is doing what, and then break out to the outside because of the of this market geometry relationships here, or continuation to the down move, and we will definitely break below the technical support and head towards 9,669. So please keep an eye on this zone here. Basically, it doesn't look good because there is a pin bar. There is like a lower, higher, a nice higher wick. We got this wick from this candle it's still in progress. However, it looks like there is a long shadow, a long upper shadow, so there is a pressure because of course the bears are defending this level. So very interesting situation on the euro dollar ahead of the non-farm payrolls. We might get more volatility. Let's take a look at the British pound because of the interest rate decision. Let me just zoom out a little. This is a 4-hour chart and everything runs as expected. So what do we have here is of course failure to break above the local trend line, test of the 1.1410, the key technical support resistance back from 1985 by the way, and then breakout to the downside towards the next target 1.1062, 1.1023. that's the next target. Let me just bring you one more target here, which is here, 1.0922, the next technical support. So what do we have here? Very interesting situation. It doesn't look like this level will be relevant anymore, so we got the ABC to the upside completed, 61% completed, so we don't need this one either. And right now we are trading in the middle of nowhere, so please expect another down move to be made soon. US dollar to the Canadian dollar due to the Canadian data. As you can see, we got our scenario here didn't work because of any another movement to the upside. Let's switch to the daily time frame, and there you go. After this strong move to the upside, apparently here the market is now going up and down, and the level of 1.35 is being now definitely being protected. So now it's a confirmed technical support. Let me just put it on the chart. Now it's a confirmed technical support. It's been protected. They don't want to break below it. Fine. However, the market is not going anywhere near the top. Okay, we got long shadows, long wicks from the long down wicks, long up wicks. We retrace a bit, of course, retrace towards technical resistance 1.3853. However, there is one more level here that might be kind of helpful, which is this one. Okay, so right now it looks like the bulls are trying to do the pullback. Let me just put some Fibonacci's, because I think we already hit 61% of the last wave down. There you go, 61% is being defended. So either this, okay, that doesn't make sense, either this or there is no breakout to the upside for bulls. So 1.3790 is the level that we should pay attention to, and as you can see here, today we opened on the lower note 1.3665, and we should be preparing for another wave progression. It looks like this is the wave A, that would be the wave B. We need a wave C to the downside. So the perfect textbook example of the ABC correction might be in progress on the US dollar to the Canadian dollar. What else do we have here? Euro dollar, US dollar index. Maybe we should take a look at the US dollar index ahead of the NFP and all of the other data. ABC to the downside completed. Very nice, thank you very much. And we have a minus 4.60 decline, which is typical, nothing new here, and the market might be ready to move up. Let me see. Local trend line, here you are. We might test it, and then of course it all depends what the market will do. Breakout to the upside, targets 114.75. Failure to break above the local trend line will likely result in another move to the downside. Okay, so in the background, uptrend. Yeah, it's clear as the sun, and there's an uptrend in the background. So we should see wave down on the British pound, wave down on the euro dollar, and wave up on the US dollar index. And in that situation, what will Bitcoin do? Let's take a look at at the Bitcoin. Oh, very nice, very nice. Let me just focus on the recent developments. There you are. Of course, this is the daily time frame chart. Let's switch to the 4-hour, and what do we see here is another attempt to rally. So what do we have here? This very nice decline, and there is, let's say, another pin bar. So our short-term trend line is here. The market is trying to break above it. Didn't work last time, maybe it will work now. However, there is one more level I would like to point out, which is the level of 20,000 basically. As you can see, almost 20,000 that the market is has been testing 1, 2, maybe 3 times even. So that might be some kind of a nice level for the bulls. Momentum breaks to the positive territory. Right now it's on the level of 58. So if there is a breakout above the trend line, the same situation as on the US dollar to the Canadian dollar, we will go towards 21,000, which is the swing high from the 26th of the October, and then we can even travel way more higher. However, please notice the fact that, of course, this is the technical resistance, that there is an empty space on the Bitcoin. Let me just show you what I mean. There you go. The next target is 22,410 if we break above 21,000. So this must be a strong breakout on a high volume, high momentum, and then there is a chance for $1,300 rally on the Bitcoin. Otherwise, we go back to the demand zone and we're gonna do the whipsaw trading for quite more time. That's everything for me for today, for the NFP Friday. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.